Hello and welcome to the Michigan NoFault Insurance Change webinar. I am Melissa Joy and I'm so pleased to be joined by Richard Carrico from Carrico Maldegen. Today we're going to be talking about changes to Michigan's auto insurance laws that take effect in 2020, in the summer of 2020. We want to talk to you about the history of the NoFault laws, as well as what to expect with changes and some financial planning advice and considerations that you should take into account as you make your decisions. Rich, thank you for joining us. Hello.
Well, thank you. Thank you for having me.
So today we're talking about Michigan's no-fault insurance laws, and I think it's important to start with some context about how we got to where we are today. Can you give us a little background on the current Michigan insurance law?
Sure. I'd like to just give a little history prior to the current law, which I think sets the context for it, is that prior to 1973, we were an at-fault state. So basically, if you were involved in an auto accident and you needed medical benefits or you needed your vehicle repaired, you had to sue the other driver for that. So that presented a lot of problems because it really clogged the court system here in Michigan. At that point, we had like 70,000 court cases going through on an annual basis. With the changes, brought it down to like 20,000. So it created these problems. And then also they had where there was a Michigan common law theory at that time called contributory negligence. So if you contributed at all to the accident, maybe you're 1% at fault, 5% at fault, then it could exclude you from benefits. So that created another problem because then you had juries who wanted to basically, right the system, and they kind of took the law into their own hands. And then he started giving drivers, what they felt was right. So then you had the insurance companies, they got bent out of shape a little bit. And so it really kind of led to the Michigan no-fault law that was passed on October 1st, 1973.
Wow, so that's a long time ago.
That was a long time ago. And, to this point, really, it's been a very good law. We have really the broadest coverages and protections out of any state in the country. And it's worked very well, but sometimes your greatest strengths can become your greatest weaknesses over time. And I think that's what's occurred with the Michigan no-fault law. So it's become very expensive, and that's really been, I think, the main complaint regarding it, because in terms of benefits, I mean, it's really second to none.
So there's great benefits, but a big cost that comes with it to the individuals that are insured.
Exactly. So when the no-fault law was passed in 1973, the big coverage that it provided for was personal injury protection, and that's otherwise known as PIP coverages. And that is the medical insurance portion of your auto policy. And really that paid for unlimited medical expenses for your lifetime. So if you're involved in an accident, you're required to be in a long-term care facility for the rest of your life, it would pay all of the costs. And in other states, they didn't have, those kinds of protections under their auto insurance. So that was the big thing that it provided. It also made it statutory, so everyone had to purchase coverage. And then also, because it's no fault, your insurer would take care of the damages to your vehicle. So you didn't have to go to court to, sue the individual who hit you to have your vehicle repaired, or if you had medical expenses to get those covered as well. So it really kind of cleaned up the court system because you went to your insurer, and then also it provided these unlimited lifetime medical coverages for if you're involved in an accident. So really that's the portion I think that has really driven the cost, is the PIP portion of the premium for the medical. And with the new changes that are coming up, there's a number of changes I'd like to kind of go over just to advise your clients on what to expect. And you've probably, have already been receiving some of the forms from your insurance companies, because effective July 2nd, all of these changes will go into effect. So
let me
whenever
share the
you're,
screen for a moment so that we can
sure.
start to talk about the specific changes. So the first, let's start with the basics. So are there changes now to the personal injury protection coverages?
There will be. So up until this point, everyone's auto policy provided unlimited lifetime medical benefits. So there were no choices for that. So now what you're
And
going to
I
have.
think on the screen you can see that that includes funeral expenses, wage loss, replacement services, survivor benefits. Is that correct?
That's correct. So as you can see, I mean, the benefits are very broad. Wage loss will pay up to, I believe it's like 85%. And there's a certain ceiling on that for up to 3 years. Replacement services. So if you need someone to, possibly cut your grass, take care of the snow removal, it'll pay up to so much per day for that. So you can see that the PIP coverage is very broad in terms of what it does cover.
Okay.
But obviously, it's been driving the cost. So now with the new law, it's going to provide selections so that you'll be able to, make particular selections.
Wow, that's a lot of choices compared with what we're used to, which is you get that broad coverage.
Yeah, so now you're going to have, there's actually 6 selections that you'll be able to make regarding your PIP selections. And we'll kind of walk through them. I have a little, actually, you probably received this from your insurance company or something that would look very similar to that, with the different selections that are explained in what they cover. So
do you want me to pull up that form?
Yeah, if you have that, Melissa, that'd be great.
Yeah.
Because if you haven't looked at these forms, I think that's like the 3rd one. So if you can go to the maybe 2 more slides up.
Yep. There we go.
Very good. There you go. So, when you first look at these forms, I mean, obviously you're not familiar with them. We've been studying them for a while now, so we're a little bit more familiar. But just to kind of walk through the different selections that you'll have, the first option is the unlimited coverage. So this is what you currently have right now for PIP, where it's unlimited.
So would that be no change to what we currently have?
Exactly.
Okay.
There'll be no changes to that for option 1. And then for option 2 or 3, you can make a selection. Instead of unlimited, you can go to 500,000 of coverage. And then for option 3, you can go to 250,000 of coverage. Option 4 is kind of, it fits certain scenarios. I'm not going to spend a whole lot of time there because I don't know how much it'll actually be applicable to your clients.
So that's even less coverage than option 2 or 3.
It is.
Okay.
For the named insured, you're going to exclude yourself from PIP. But if there's anyone in your household that still would need PIP, maybe younger children, then it would pick up coverage for them up to 250,000.
Okay.
And then on the next page, option 5 is for 50,000 of coverage. Now, to qualify for option 5, you have to be enrolled in Medicaid. So if you're not enrolled in Medicaid, then you cannot select this coverage.
So Medicaid is health coverage for low-income individuals typically, or individuals without assets.
Exactly. So this might be a very advantageous selection for those individuals to make their premiums more affordable. Obviously, you won't have the same premium charge as you would if you had unlimited. So it could fit certain budgets, but again, you have to be enrolled with Medicaid.
And there are trade-offs too. So that potentially Medicaid may not cover the full extent of what PIP would. Is that correct?
That's correct. So it would be coordinated in the sense that you would have 50,000 of coverage for PIP, and then Medicaid would pick up the other coverages. Now, again, please contact Medicaid to find out exactly what they're going to pick up. We don't have, exactly all the coverages that they're going to pick up. But I would definitely contact them to make sure that you're well informed in terms of if you were involved in an auto accident and you needed health coverage, what that's going to help pick up for.
And then I've been hearing from the Medicare consultants that I talk to about option 6, which is no medical coverage if you are covered by Medicare Parts A and B.
That is correct. You can opt out, so there would be no PIP coverages. But we're still advising our clients that if they have wealth to be protected, that they would not select this, that we would still recommend the unlimited option, which is option 1. But now to qualify for this, you have to be enrolled in Medicare Parts A and B. So you have to be enrolled in Medicare Parts A and B. You could select this, and it does sound certainly good that hey, I can opt out. I'm not going to have to pay for PIP any longer. But there's a number of coverages that we've been able to look at in where it's not going to be covered under Medicare necessarily. So
right.
Again, please check with Medicare to determine exactly what coverages are going to pick up for you, so that you feel comfortable with that.
So there may be an immediate cost savings to something like option 6 or option 5 if
Yes.
you would be eligible. But there are also considerable trade-offs in terms of the amount of coverage that you are have for yourself or for your vehicle.
Yes, and Melissa, I think the biggest coverage really for your clients to take in consideration would be if they're involved in an auto accident, they have to go into a long-term care facility for a long period of time, then that is not going to be picked up by, there might be a little bit of coverage under Medicare. I don't know, again, check with Medicare to determine
just a
that.
handful of days, not years.
It's going to be a handful of days. It's not going to be years. So, really it's kind of like a long-term care really coverage to have the unlimited, because they would pick up the coverages for that.
Right.
If there's any type of, dental expenses, I don't know exactly what Medicare is going to pick up for that. So
not much.
Not much. So unlimited PIP would help pick up for that as well. And then also, if your home you need modifications for your home, it could be for your auto that you would need now because of this accident. They would pick up for that as well. So again, I think, the first look is like, wow, hey, I can save a lot of premium here, but I would really encourage you to take a look at what actually Medicare is going to pick up. And because there are some big items that they're not going to totally cover, and that could make a big difference for you with your financial plan. And we certainly wouldn't want that to be impacted.
Yeah, I am in concurrence. Both what I hear from Medicare consultants, what I think of as a financial planner, and what I'm hearing from you as an insurance expert, all on the same page. Proceed with extreme caution for reducing those types of coverages. Yes. Do I need to go to the next page, or does that pretty much cover things?
I think that pretty much covers things on that. We'll kind of go to the liability changes.
Okay, so I can go for, well, I would mention first, so we see these premium reductions. And one of the things that it is important for me to note that this is not a reduction in your overall auto insurance premium, because PIP is only a portion of the premium that you pay for auto insurance. Is that correct?
That is correct, Melissa. A good point. I'm glad you brought that up, because I think that, some policyholders are going to be expecting, if they selected $250,000, that they're going to get 35% off of their total premium, annual premium. And that's not the case. It's just for the PIP portion of the premium. So again, obviously you're going to take that in consideration. Is it worth reducing my PIP coverages, which are very important if you're seriously involved in an accident, based on the amount of premium that you're going to save? So certainly this is something that you need to be able to walk through with your agent as you're making these decisions.
Perfect. So then liability limits?
So there's going to be some changes here as well. This is probably the next biggest change is that currently right now, the minimum liability limits that you can have on your policy is $20,000 per person, $40,000 per accident.
That sounds low.
Yeah, which is not very high. They are going to bump those to $50,000 per person, $100,000 per accident. Still not real high as well, but at least it's an improvement over the 2040 going to $50,000 per person, $100,000 per accident.
Okay.
Now, there is going to be a form, and we'll kind of take a look at that form as well, another form that you're going to have to complete. And if you don't complete this form, there's now a default minimum limit. And the minimum limit is $250,000 per person, $500,000 per accident, which is a much higher limit, which we would certainly recommend. And most insurance companies will write an umbrella over that limit. So if you have an umbrella policy, there's certain underlying limit requirements that you have to have on your auto policy and your homeowner's policy. Carriers that we represent, $250,000 per person, $500,000 per accident is generally the minimum. So that's not a bad default selection if you do not turn the form in. So that would become your new default.
So can we just pause for a second and
Sure.
define umbrella liability insurance?
So an umbrella, and that's an excellent question because I talk with insureds during the year and clients I've had for a lot of years, and I'll bring up different coverages and I'll say, well, hey, I've got an umbrella. Doesn't the umbrella just kind of pick up anything that my underlying policies do not cover? And that's not correct. Basically, an umbrella is an excess liability policy. So if you had the default limits of $250,000 per person, $500,000 per accident, and you had a $1 million umbrella policy, if you're involved in an accident, you were negligent, the judgment was, say, $1.1 million. The first 250, if it was one person that was involved in that, the first $250,000 limit would be exhausted under your auto policy. And therefore, the additional $850,000, you would go into your $1 million umbrella. So it's basically just an excess policy that sits above your auto policy and your homeowner's liability.
And as a financial planner, I look at that as excess carryover protection to protect your wealth that you've accumulated.
Exactly. And we recommend, Melissa, at least an umbrella limit or total limits that would equal your net worth. And sometimes, even picking up another $1 million on your umbrella, I mean, it might be another $50, $75 a year. So it's not a whole lot of money. So, having that little, maybe an extra $1 million on there is not going to cost you that much in premium, but it will certainly give you, some added protection just in case you would need it.
It's rare that you need it, but when you need it, you need it.
That is for sure.
Okay, so let's move on to talk a little bit. Oh, well, was that form in the end of the other document that we were sharing, or the separate document?
It was a separate document.
Okay, let me pull that up for a moment so you can see the form.
There you go.
Okay.
Let me see. Not that one.
Not that one. It's not down here. Let me not have that form.
Okay, I thought it was in another, I think it was in the second attachment.
That one was the Medicare attachment in mine.
Okay.
So we'll disregard that. But there's an extra form, which essentially means that you need to opt out, or you need to acknowledge that you understand that you're reducing your coverages because they want you to sign off that you know that this is a big deal.
Yes. And this is why this is so important. They have another form. They explain what bodily injury liability is. They also give you, they want to make sure that you understand the risk if you have lower bodily injury liability, limits, because this is where this is going to come into play. Up until now, again, I've said that under PIP, everyone has had unlimited coverage. Well, now, you're going to have policyholders that are going to be able to make different selections. So it could be somebody who's able, to select 50,000 or 250,000. So if you're involved in an accident, you're negligent, and that individual ends up having more medical expenses than what their coordinated coverage through PIP would offer, then now they can come back after you through a suit
Right.
for those additional limits. So up until now, it really hasn't mattered because everyone has unlimited lifetime medical coverage. But now they're going to be selecting limits that are not unlimited. So if they have, if you're negligent and they have their total medical expenses exceed what they have coverage for, then they can come back after you, in a suit for that. And
so there's potential for more litigation than perhaps there were, or that's what we're forecasting.
Exactly. And that's why they have this this additional form for bodily injury, making sure that you understand, what your risks are if you choose lower limits. They want to obviously make sure that you have adequate limits in case that were to happen.
That makes sense. So let's go on to some of the other changes. Now, you have described an extraordinarily robust coverage that we had with the current law that is now changing. So I assume that there were intentions of minimizing the cost for insurance companies of, that broad protection.
Correct. So again, the premiums have increased primarily under the PIP, under the medical. The medical expenses have really just, really pushed the premiums up to where most policyholders are saying, hey, ouch, I'm paying a lot of money.
Enough. Yeah.
Enough's enough. And also we have a lot of uninsured within the state of Michigan as well. So that's, that's not good for everyone as well. So believe it or not, there really is no cost containment under the current system. So under the new changes, there are going to be some changes. And I'm very interested to see on how it's going to play out, how the experience is going to play out in the future years. So now there's going to be a medical fee schedule. And believe it or not, they've just been paying whatever is, pretty much customary.
Whatever bill comes in.
Pretty much on those bills, there's some parameters there, but it's certainly not a medical fee schedule. And I've seen this on the workers' compensation costs within the state of Michigan, where back a number of years ago, they went to a medical fee schedule and it brought down premiums dramatically. So I'm hoping that long term, this is going to help keep a lid on the medical costs coverages under the PIP. So that'll be good. They'll also have some utilization review. So somebody will be looking at claims, seeing what they can do to minimize costs as best as possible with, taking care of obviously the individual that was injured. And then also there's going to be an anti-fraud unit as well to look for those situations that, are adding costs to the system as well. So I really believe in these three areas. Hopefully this is going to make a big difference in trying to control premiums for the future.
Yeah, and I think that is an important kind of point to note, that not only in this area, but we're entering a new era for the state of Michigan in terms of what auto insurance looks like. So much of what we're anticipating is what we think will occur, and in all likelihood, that'll be somewhat on target. But there's also kind of a wait and see of what will this mean or what will that mean in this new time frame. So we also have an order of priority that's being established for collections on an injury.
Correct. And the reason why I bring this up is that things are changing now. If you were involved in an auto accident, if you didn't have insurance, the system was really set up, no matter who got hurt, somehow somebody was going to be paying, whether you attached onto the other individual's policy, even though necessarily they weren't at fault. They wanted to make sure that individuals had coverage. Well, you ended up, the insurance companies ended up paying a lot more than probably what they should have, because there were a lot of other individuals that, maybe from out of state that had their own insurance that they were paying for. So now they've tightened up the definition of who is going to be an insured under your policy. And basically, it's going to be a resident relative that will be covered under your policy. So again, check with your agent just to make sure. And the reason why I bring this up is because maybe you have some children that are away at college. Maybe they take up resident in another state so they can take advantage of the in-state tuition. So they end up changing their address on their driver's license. So that could be a potential area for your clients that might need to make sure that they talk this over with their insurance company to make sure that they would respond if their children are still driving under this policy. They do not have their own policy.
So it's important to review exactly the circumstances of the household if they're covered under the policy to make sure there's no gap in coverages.
Exactly. So when we talk to a client, we ask, who are the drivers in the household? And we want to find out the relationship that they have to the named insured on the policy, just to make sure that, there's nothing that's going to fall through the cracks and somebody's involved in an accident and then they, learn the hard way that there's no coverage for this individual.
Really important for full disclosure.
Yes.
Okay, and then there are some other changes that I think it's important to note.
Yeah, I'll just run through these pretty quickly. They've, with underwriting, they've gotten rid of a lot of restrictions. It could be that they're rating based on credit scores, if you own a home, educational level. These things are going by the side with the new changes that are coming up. So they're not going to impact your rates. Some policyholders, obviously, it would be to their benefit. A lot of others that isn't. So they're going to kind of take those away. Everybody's going to be on pretty much a level.
More level playing field.
Exactly. We also mentioned about the future allowable expenses. So basically, those are the expenses under PIP that somebody could come back to be compensated for in the suit because they didn't have enough PIP coverage and they were involved in an accident and you were negligent, you hit them. So that's a big thing. So we obviously want to make sure that you have adequate liability limits. The mini tort was increased from 1,000 to 3,000. And this is kind of like, scenarios where you take somebody to small claims court. Maybe you didn't have any physical damage on your vehicle. Somebody hit you, they were negligent. So you go to small claims court to collect for that, or maybe to cover a large deductible. You could do that as well. But all those will go into effect effective July 2nd.
So one of the, I just want to pause the screen share here and just talk about how you're talking to people about this. First, does everybody's policy change on July 2nd, or is it when they renew sometime between July and the end of the year?
That's a great question. It's when your policy will renew after July 2nd.
Okay.
That's when your changes will go into effect. There are some companies that, if it's, for your benefit to make a change now, then they're going to allow you. So obviously check with your agent and they'll let you know what your particular carrier, what their position is on that. So it'll be on your renewal after July 2nd that the changes go into effect.
And there's an assumption that most people, well, there's kind of the message that's been touted is your rates will go down. My understanding is while most of the kind of playing field has been leveled in terms of assumptions, that you can do some, I don't know, geographical groupings that may result in premiums that do not go down for areas such as Detroit. Is that, it's TBD, I know, but is that what you're hearing as well?
Well, it's really hard to say. Again, they've tried to put everyone on a level playing field as best as possible. So the intent was with the new law is that individuals' premiums would go down. I pay premiums just like everyone else does. And, it'd be nice to get a little bit of a reprieve on my premiums as
Sure.
well. So as a general rule, I would say that, that's the intention, is that, that rates hopefully, should go down for you. But, certainly I can't make any, predictions regarding that. You'll just have to work with your agent, to make things fit into your budget, and they can let you know, what is driving your rates. And so you can make the proper selections. But again, we're trying to look at things that can really impact your life, such as something that would affect your net worth, your financial plan, your goals and dreams that you have for your family. Certainly, we want to take a look at that, and then craft the coverages around that for you. So
That's
again,
great.
hopefully most people do see some reductions.
Makes sense. That's a great reminder that as a financial planner, when we look at insurances, we're looking at the risk in your life, and we're looking at, also your goals and where you're at. So insurance is not just a commodity. It's not something that you can just check off a box, say I'm covered. It really requires a review in the context of your overall financial life and your circumstances, which is, I know how you view things as well. So make sure that you do not kind of leave your insurance coverages on autopilot. Make sure that you're reviewing them, and when circumstances change in your life, that you're also updating your insurance coverages and reviewing those.
Yes. And we work very similar to the way that you do, Melissa, with your clients in terms of doing reviews. We don't make any coverage recommendations until we've kind of gone through, a little bit of our risk review to determine, what your exposures are. Generally, we're able to determine or identify some exposures that maybe you really didn't think about. And
Right.
so we know how that, how the coverages under your homeowners would respond, or your auto policy would respond. So we want to make sure that we go through that to make sure that we're taking into account what your exposures are, and then we can start talking about coverages and what would work best for you. But we obviously want to make sure that you don't have a large uninsured loss that would come out of your nest egg.
Absolutely. In many cases, for clients that I work with, the maintenance of the unlimited PIP coverage is where we would in all likelihood recommend, or the agent will. Everybody's circumstances are different, so that's not to say that that's a blanket recommendation. But it is, I guess the question I would have is why not why to elect that, but why to default to someplace else.
Yes. And I'll just leave it with, just three recommendations just to kind of sum things up. I mean, again, we agree with you. We're still recommending the unlimited. Individuals will have to make that decision, what works best for their budget, but we're still recommending the unlimited. Certainly we would encourage you to purchase an umbrella policy that would be at least equal to your net worth. And really look at maybe even purchasing $1 million on top of that.
Yeah,
And
I'll just mention I contacted my insurance provider for a discussion on umbrella liability this month.
Yes, very good. And again, the umbrella policies really are not as much as what people might think.
Mm-hmm.
Again, it's in excess to your auto policy and your homeowner's policy. But also working with an agent who is really going to work in the same manner that you work with your clients, Melissa, in doing the reviews, because things change.
Right.
You have new exposures in your life. We try to keep our clients abreast of new things that are happening out in the world that maybe is a new exposure for them. So we certainly want to keep them abreast of that, so that we can help protect their net worth as best as possible.
Well, I think that's a great way to summarize the recommended actions with the new changes to the law. And they go back to the actions that we always recommend. Revisit your risks and make sure that they're adequately covered in this particular circumstance. Strongly consider the unlimited PIP. And then umbrella liability is an important companion in many cases to other insurance coverages. I know you drew some of the information here today from some additional sources, so I just want to make sure that those are credited. And additionally, if you have questions, this is Rich's contact information, and we're also going to provide in the show notes and the blog description contact info for Dell Winsley, who's also at your office, Rich, who can handle individual questions and coverage inquiries.
Absolutely.
And if you need any of that contact information or have follow-up financial planning questions based on this discussion, please don't hesitate to contact me either. Here's our address, my phone numbers, as well as, of course, my email. But I really appreciate the discussion. I think that, as with anything, when things change, it's time to review and evaluate. And you're a great resource for the Financial Planning Association and for me. So I really appreciate your insight, Rich. Thank you.
Thank you. I appreciate it.
Okay. Have a great day.